Senior housing just posted its strongest returns in years, outperforming the broader real estate market. So why are investors still holding back? And why is red tape making it harder than ever to get new projects off the ground? Today, we're cutting through the noise to break down what's really happening, what's stopping investment dollars from flowing faster, and what senior living operators can do to take advantage of this moment. Let's get into it.
Welcome to From Leads to Leases, a CCR Growth podcast that helps senior living providers transform their complex challenges into opportunities. Listen in for stories from industry leaders, innovative strategies, and insights. And with our expertise, learn how to increase occupancy faster, guaranteed.
Welcome to Breaking Ground, Senior Living Now, a special edition of From Leads to Leases. I'm Jerry Vinci, CEO of CCR Growth. And in these fast episodes, we cut through the noise to bring you urgent updates, hot takes, and industry shifts as they happen. Let's talk about senior housing investments in 2024 because the numbers just dropped and they tell an interesting story. According to Nick, senior housing delivered a 3.6% total return, outperforming the broader NCREIF property index by over 3 percentage points. That's a strong comeback, and it's the first time we've seen positive capital appreciation since mid-2022. But here's the thing. If the numbers are this strong, why are so many investors still holding back? And why does it seem like building approvals are getting more complicated, not easier? So there is good news. Senior housing is winning the numbers game. If you've been following the real estate investment world, you know that senior housing has been a tough sell for some investors over the past few years. But this report should be a wake-up call because the market fundamentals are shifting. First, independent living is leading the charge. Higher margins, stronger occupancy, and more predictable revenue streams are making independent living communities outperform assisted living. Investors like predictability, and that's a good sign. Second, demand is only growing. We're at the front end of an unprecedented demographic wave. The 80-plus population is growing fast, and with it, demand for high-quality housing and care solutions. Third, investment stability is here. Compared to other real estate sectors, senior housing is finally regaining its footing. The total return speaks for itself. It's outperforming traditional real estate investments right now. So if senior housing is performing well, why aren't we seeing a flood of new investment dollars? And the problem is investors are still hesitant. There are 3 big reasons why some investors are dragging their feet despite the positive numbers. First, uncertainty about long-term costs. Investors have been burned by rising labor costs, operational inefficiencies, and unpredictable expenses like we saw during COVID. Yes, the returns look good right now, but can we sustain profitability with staffing shortages, rising wages, and increasing regulatory demands? Second, red tape. Red tape is slowing everything down. Getting new projects off the ground is a nightmare in some regions. Zoning restrictions, state regulations, and slow permitting processes are making it harder than ever to build or expand communities. Even investors who want in are frustrated by the endless approval processes that eat up time and money. And lastly, they want proof before they commit. Investors aren't just looking at market trends, they want real-world examples of communities that are scaling efficiently, maintaining high occupancy, and controlling costs. This means operators need to be investor ready with a strong business case, financial transparency, and a clear expansion strategy. So if you're in senior living and thinking about expansion, this is your window of opportunity, but only if you're prepared. Here's what you need to focus on. You have got to show strong occupancy and revenue growth. Investors want stability. If you can prove consistent high occupancy and a solid revenue model, you're more attractive. Second, you need to optimize your operations. Efficiency is everything. Investors love communities that run lean, that integrate tech, and minimize unnecessary costs. Next, you need to get ahead of regulatory hurdles. The red tape isn't going away. So start early, bring in legal experts, and know your local requirements inside and out. The faster you navigate the system, the more attractive your project becomes. Next, you need to be financially transparent. Investors want to see the numbers, not just hear the vision. Have your financials locked down and ready to present. And lastly, you need to prove that you can actually scale. If you're planning to expand, show a clear path for growth. for market analysis and realistic projections. The bottom line, senior housing is outperforming other real estate sectors, but the industry is still dealing with a credibility and regulatory bottleneck. Investors want in, but they need reassurance that projects will be profitable, they're efficient, and able to navigate the red tape. If you're a senior living operator looking to grow, now's the time to get your house in order. Show investors you're ready, control what you can, and don't let slow approvals kill momentum. That's it for this edition of Breaking Ground Senior Living Now. If this was valuable, subscribe, rate this episode of From Leads to Leases, and please share. It helps more industry pros stay ahead of the curve. I'm Jerry Vinci, CEO of CCR Growth. Thanks for tuning in. See you next time.
Thanks for listening to From Leads to Leases. Are you ready to fill your rooms faster and increase occupancy? Visit ccrgrowth.com to learn about our Senior Growth Innovation Suite, a proven system to generate highly qualified, tour-ready leads, accelerate sales, and reduce acquisition costs. Let's connect and turn your challenges into opportunities. See you next time.